tower. All right, and this very nice picture you see on the screen here is actually our office, okay? And we are open Mondays to Saturdays. Of course, check the opening hours at the website, and you'll be able to see whether you can drop by. But of course, one thing to note is that you will need to change your pass to enter. So that's just one thing to take note. We're opposite the blood bank. Okay, so if you donate blood at Westgate, you probably already know where we are located. Okay. So for those of you who maybe are new to this webinar, or those who are seeing this for the first time, of course, Phillip Securities as a financial services firm, we are most well known for our province trading account. Okay, and these are just two of the types of the most popular accounts that you have: cash management and cash plus. And of course, just take note that cash management is linked to CDP, whereas for cash plus, it is not linked to CDP, and all the shares will be held by Phillip as the custodian. For foreign shares, no matter what you buy, Phillip is the custodian. Okay, it's only for cash management. CDP shares Singapore shares will be held in a CDP. Now, trading wise, cash plus is generally lower across the board. Okay, I won't go into the specifics, but generally lower across the board. And of course, if you're buying unit trust, it doesn't really matter which platform you use, because there are no sales charges, platform fee, or switching fees. This is provided you are buying on your own, right? If you're buying on your own, then no fees. Okay. If you need advice, and then that's a separate matter altogether. Settlement wise, your cash plus account will require some pre-funding before you trade. Meaning, if you want to trade $10,000 of shares, you need $10,000 in the account. All right. Okay, and something to take note, we know that the US has announced the interest rate cuts, and the first cut of 50 basis points occurred last month. And this, of course, led to a fall in the money market fund. We've always said that money market will roughly match the interest rate environment. Okay, and so the money market fund, for the first time, I think in quite a while, has had an annualized return over the last rolling week of just under 3%. Having said that, I think it might have gone slightly higher this week, but still, it's still a reasonable place to park your money, because this money has no upper cap, right? So, for example, many of you have this, what we call the high yield savings account. For example, your OCBC 360, your UOB1, where you have to meet some criteria in order to gain, say, 4% interest or 5% interest. And on top of that, there is a maximum you can earn the interest on. Okay, this does not apply to money market fund. Okay, your return on the money market fund has no cap. And the reason I can say this is because I have a close friend who actually, his father passed away, and then they sold the property, which was it was a corner terrace, and he got a share of the money. And he was looking at buying another property, but didn't know where to park the money first. So in May this year, he actually parked 960,000 with me. And good news is he found a property he wanted, so he actually withdrew the bulk of it. But I checked, and actually over the past 5-6 months, he actually earned very close to $15,000 just leaving the money there. And there was no there's no like lock-in or anything. For example, he had to put that money in a T-bill or FD. He would be subject to a lock-in, without this flexibility of being able to withdraw the money when the right property presented itself. So that's just something you can take advantage of. Of course, the USD money market rate will be higher, but that of course comes with the currency risk. The US dollar to Sing dollar has weakened a little bit. US dollar is like 131 now. It used to be 135 some months ago. Okay, but if you are able to take currency risk, then of course US dollar would be an option to consider. All right. Okay, and then of course, so that's the screenshot on the returns. I think it's quite a reasonable return given the combination of flexibility, no cap, and the alternatives you have on the market that are actually roughly the same, but with criteria attached to it. Okay, so if you're not already a client and you want to open a account with us, and you are someone who wants to trade on your own, okay, you just ensure that you input PS1 this code under the preferred trading representative, and of course our team number is here, and you can actually reach out to them and you can get support from them lah. If you want to work with an advisor, then maybe reach out to an advisor first before opening any account, because we will then assess what might actually be the best way for you. It might not even be DIY if you need assistance, right? Okay, so that's our team contact number. Do save it if you want to reach out to us for any matters relating to finance. Okay, and of course, once you are once your account is with us, you're welcome to join our WhatsApp community. In fact, actually, we're added to it, and we will be sending out calls, things that you can look at, trade ideas for you to consider. And I believe this is sent out every day, and every trading day at least. And it should give you some people say that, what should I buy? What stocks can I look at? And we'll give you some ideas, right? And this thing has been ongoing for quite some time, practically every day, as a matter of fact. Okay, so I think that is something that we will do to support all of you in your trading and investment journey lah. Okay, and so that is about it for the stock counts, and for those of you who are new to us. Okay, and of course, later on I will be talking about the CDP share transfer. This is a new program, a new scheme that has just started just this month. Some of my clients actually asked me about it. I'm going to share my thoughts and answer some commonly asked questions about it towards the end. I think that will happen later. So so stay tuned for that, because I think it can be quite a viable thing for some of you, especially if you need help with your stock portfolio. But that's for later. At this point, I'd like to hand over to Chung Wee to open up to start with the market update. Chung Wee, are you there? Let me see if you can.
Done.
Are you unmuted?
Yeah.
Yeah.
Hear me now?
Yes.
Okay.
Yes. Okay. So everyone, please welcome Chung Wee to start off the market updates, and he'll be talking about quite a fair bit on was it China and China shares as well, Chung Wee?
Okay, I went up because looking at the amount of slide I have, I decided not to go directly into individual share, but just giving an idea on the sectors or
no problem. I think everyone's eagerly waiting for that. Okay, so I'm going to stop my share now. Chung Wee, you are welcome to share, and all yours.
Okay, give me a minute. Let me just try to get my PowerPoint running properly. Where is my share button? Let's see. I got the share. Playing with too many screens, sometimes it can be a problem. Can you see my screen? As in the full sharing screen?
Loading. It's loading. It's PowerPoint. It's not really the
oh, it's not
presentation. Okay, now it's okay. Yeah.
Now it's okay, right? Okay,
yeah.
Cool. So let's see. Okay, I'm going to touch a few topics. Again, this is personal opinion after looking at the various news, various information, some thoughts around it. Please do your own independent analysis, as mentioned earlier by Elijah. So the question is, because I have a 20 over slide, so I'm not going to go deep into individual slide. Otherwise, 1 minute to one slide is 20 minutes. I want to leave enough time for my dear colleague to talk more about SRS and also the CDP transfer, which is kind of interesting. So field area, market overview, which is usual. And I talk about some recent US, China, Japan move, US election. What does it mean for a certain sector if, let's say, Trump wins or Harris wins? What does it mean? Because so I'm not going to go into individual shares. China and Hong Kong market, where are we now? And last but not least, I would just say follow the money, because how the money flow will give you an idea where we're going to be. Okay. So without delay, US key indices has been going up. In fact, October still up, although the momentum has slowed down quite a bit. Actually, last week, Dow and S&P 500 actually has a little bit of drop off on last Friday. But then, of course, overall, it's still on an uptrend. It's still above its 20 days moving average and everything. The only thing is that I'm also noticing that the momentum seems to be slowing. So we have to watch how it progresses. I guess the US election has been a momentum that's continued to go up. And I didn't include one slide which is talking about this week. I think many people knows is the tech big earnings is the tech big earning week. So a lot of tech stocks, particular Magnificent Seven, will announce this week towards the end of this Wednesday, Thursday, Friday. So those will be a key information to note. One interesting thing is some of this Nasdaq big jump is because of Tesla. Tesla actually has a very interesting movement this month. So without delay, let me just maybe look at maybe a few more notes. I noticed that the week information, the weekly volume. This is a weekly chart. I'm not talking a daily chart because daily chart movement too much, so you can get a bit confused. From weekly charts, the volume has not been as high as in the past, above average. It's have been kind of coming down slowly and all things. So means that people are more cautious. Okay. Something that I guess people are usually more cautious when they're not sure how the election going to progress and how it's going to move. Okay, next slide. Let me see. Okay, how come it's not moving? Okay, let's see. Okay, next. Yeah. Wait, sometimes this computer give me a bit of issue. Okay. Yeah, all right, thanks. Sorry about that. This one, oops, is the slide about the Magnificent Seven, and it's a bit crowded, I would say. But if you look at the circle area, which is the one that I drawn in here, you will notice that the Tesla is the one that is like beginning of the month it drop, and the last 1 week it just jumped like crazy after its earning result that helped to move the market up too. For the month of October, actually Google is the only one that's down, but the other rest are slightly up and of course Nvidia continue to be the star player, except that last 2 weeks has also been a bit of uh, trying to test its high but come down a bit. Hopefully it can continue to move up. I guess AI is still the main momentum that's still going on in there. I will watch closely how their earning result comes in today or this week. So that's something that we need to watch it. As for another area that I watch closely is the US Treasury yield. It's very interesting is because when US cut rate, usually it means your treasury yield should actually drop off. But it is true that the short-term yield, which is less than 1 year, less than 2 years, 6 months, actually drop off. But the longer term actually pick up. Okay, so the 2 years also pick up actually. The 10 years also pick up, and even the 30 years pick up, and a lot of them has start breaking up from its past trend. So that's sign that though we think that the rate is down, but it might not mean that it's always hovering lower. There's always speculation that the rate is high partly because people are factoring more what they call it, not an inverted yield, normalized yield. That means long-term yield should be higher than the short-term yield. In the past, there has been an inversion for about easily 2 years. Over the last 1-2 months, the inversion has stopped or reduced from in the past anything that's less than 5 years are inverted. Now less than 2 years are kind of inverted. So the 1 year and the 6 months are still inverted, but the RS are not inverted anymore. That means the longer term is higher than the shorter term. So that's kind of interesting because the other thing I'm watching is also, which I didn't include in here, is how much of this new treasury bill or bond that US is issuing, and how much are they being able to sell in the market, because that also play a part to how it's like okay, the yield and the price, right? Uh, if people are not confident about your future payment, people will want to buy your treasury bill at a lower price, which means that your yield had to go up. So it's an inversion that is happening. So does this mean that people are more cautious on buying the US Treasury? That's why the yield is coming up, or is it just a normalization? So something that we need to watch it. I excluded one longer term period, but basically it's showing a trend that is not the coming down trend, but rather reversing it out. Okay, so it will be interesting to see how the US election will affect this in the coming months. Um, okay, next, let me move on. Um, this is another slide that is, wait, did I miss out something? No, okay. This is another slide that is being used many often by the more sophisticated analysts, and they look at the jobless rate versus they compare certain of the different in the jobless rate and recession, and to give a recession indicator. Anything above, when it cross above 0.5, usually it means a recession. But if you look at the mass media report of US economy, they are doing very well. Although this has started to hit 0.5 about 2 to 3 months ago. In July, it started to hit 0.5. August was 0.57, September was 0.5. So it's interesting that although it showed that recession is coming, but the market news is saying no. So who is telling the truth? I'm not sure, because the other interesting thing was September, there was a big revision. In August, there was a big revision of job data that they revised down that actually employment is not as good as what they reported in the past. Then September, they reported a much better job creation than the market expected. So who is telling the truth, and what is the real truth behind the US economy? It's a kind of a question mark for me. But again, data can be manipulated to some extent, but the real economy will need to look at how people spend and everything. Okay, without delay, let me move on to the next slide. So what does it impact now so far? It's interesting, the job data that they announced somewhere around September, um, that they revised the what they call it, the job data. It actually causes the US dollar to start moving up. Okay, and let's remember, US dollar is a reserve currency, and the strength of US dollar will also mean that people are willing to buy their treasury. Okay, so it's an interdependent factors that is inside there. Sometimes you want to make sure that your currency looks good, so people continue to invest in you. Okay, um, and so there is certain various factors that people can Fed or the treasury and different factors can affect it, the confidence. So when you announce a better job, people have more confidence. So the US dollar actually strengthened. In a way, they help their what they call it, stock market too. Okay. So that's kind of an interesting dynamic that's happening now. Again, I also noticed that the gold has been going up. Gold is not the stocks or asset that give you dividend, okay? But it is also an important asset to play as a safe haven in case anything. Because right now our currency is always fiat currency. That means it's all printed out thin air. It's about the confidence of the economy. So whenever there is a war, there's uncertainty, people still fall back to gold. Perhaps not as much as a lot of asset in there, but a physical gold of 10% may be a good way to put as a safety net in case for the high net worth that things goes the wrong way. In terms of the tension, geopolitical tension, even in Southeast Asia, I mean in South China Sea is also there. So you never know what may happen. So that's just some thought, but it's interesting that central bank is buying, the gold futures continue to go upward. Okay. With that, the other things is next slide. Let's see, where's my next slide? Okay, I'm going to switch gear to talk about US, China, and Japan move. Um, the This is not this is more kind of summarizing some of the event that has happened or some of the decision that has happened that kind of give you what are their plan or their intention. Okay. Again, it's my perspective as I compile some of the information. Do feel free to do your own analysis. Okay. So September key event. Fed has a rate cut on September 8th. That was the biggest event and a biggest booster to the US stock market too. And Japan has in late July, August has talked about raising their changing their rate policy, increasing their rate. But in September 20th, they keep their rate at 0.25. So there is no rate change in September. And after the recent election, I'm just curious how it's going to progress. But basically, they kept their rate at 0.25 without hiking hawkish rate hike again. So that helped to calm the carry trade in our state because the carry trade was worried about continue to have higher rate, mean people cannot use cheap Japanese yen to buy to leverage to buy stocks in our state. Then on September 24th, China uh, kind of opened up this huge stimulus target and how they're going to launch it and all things. So that's key dates that happened within September. I think last month update, I did mention part of this. So what has happened after that? Of course, September 24th, after the announcement, there was a huge interest in China ETF or related ETF. And as you can see, the CSI 300 just jumped. It's just like it's just like a hyper jump. Okay, the China A50 also hyper jump. And interesting because 24th to 30th, that's only the few days. Then they went for their National Day holiday break. So there was a long break, about 7 days on the 8th, and they come back. So you can see there was some of the Hong Kong stock continue to go out as they're still trading while the China stopped any trading until October 8th. But after October 8th, as the stimulus detail comes in, not as clear with factual data or numbers, it start to pull back. Okay, it start to pull back, and some of these big ETF or US, Europe money coming in start to kind of put it on the sideline, watching what's happening. So again, you see, people are looking at where the money need to move to. So when China announced this thing, of course, it sucks away a good lot of fund from US, Europe into China. Okay. Uh, Good and bad in a sense. Good for China, of course, not so good in terms of the rest of the Western countries. And then, so the next thing, what happened is on October, US adjust or mention their job data on October 4th. And the job creation in September is a lot more than the anticipated. I think that was like non-farm payroll were expected to increase by 150,000. It came back like 200 over thousand, 230,000 or something, much, much bigger. Okay. And that kind of created again the drawback into US market interest. Okay. And then of course China went back to announce that they continue to announce different plan, but I just kind of pick up the key one. I think October 8th, there was a announcement on their, not their Bank of China, or not People's Bank of China, but their other committee about what is the number, but it wasn't given a factual number. That's why people lose confidence. And then on October 23rd, they announced that they have planned to inject 1 trillion yuan into the state bank to power the growth. So again, is creating the interest into the China market. Then Japan also announced something about their policy, possible policy impact. So October 28th, which is just after their recent election, they mentioned that, well, they may have, they expected to hold their rate now, of course, but they are unlikely to be deterred from the rate hike cycle despite the ruling LDP losing their lower house majority. So There is a little bit of the Japan is always is like a proxy of US because you can look at it from the carry trade, it helps them to uh, have cheap money to buy into the various equity market. Okay, so that's kind of something that's interesting. So of course, then what happened November? There are two key dates, I would say. I mean, besides the 5th of November, the US presidential election and all things, there is the Fed rate decision on November 7th. I'm not sure how many people follow it closely. In the past, there has been first rate cut in September was 50 basis point. And then they were saying, okay, November, October, they will cut some, no, November, they cut back. But then they started to tweak their tone and start to say that maybe they need to relook at it. They want to pause the rate cut. So it'll be interesting to see how November 7th, what's the final decision? Are they going to continue a 25 basic point cut or are they going to hold the rate? Because the high interest rate is always a safe haven. People invest in there and then they will draw the money out from the China marketplace too. And then there's another key date. China People's Congress meeting is happening in November 4th to 8th. This is a kind of captured information. One of the key things that on October 8th, I mentioned earlier, there was no factual number being issued about what is the stimulus in terms of different sector and all things. It's partly because they cannot announce anything until it cleared the November People's Congress meeting, because this is a decision body. So it will be interesting to see what is going to come up from there. Okay. Why I mention this is because you can see that Japan, US, China are playing their moves to attract the fund differently. Okay. So the next slide will give you an idea on some of the things that is happening. You see, I just kind of pick up both currency pair, US CNY and US Japanese yen, right? You can see that October 8 here is partly because October 8 is this is kind of Chinese yuan is not kind of freely traded. So during the period of the holiday, there was not much trading in the overseas market. So that's why October 9 is itself start to depreciate against US dollar. So you can see that the strength of US dollar does impact the currency itself and does impact the fund flow. Likewise, you can see that I think as after September 13, when initially the Japan was very hawkish about their rate hike, then suddenly they started to tone down and say they hold the rate and all things in October. You can see their currency also depreciating. So is it a move that they want to do, or is it something they jointly work with US to help the alliance? I'm not sure, but definitely it has an impact on the overall market. Okay, so everyone is fighting for the money pool. Of course, the two power has their respective problem, but yet they are seeking their way to attract the market themselves. Okay, next is the next slide is just a summary. I guess when the two elephant fight, these two elephants, especially China and US, I don't think it will soften regardless of Harris win or Trump wins, because I think this contention will persist. As you can see, there's more tariff, there's more technology, there's more saying that there's a certain semiconductor that is being built into Huawei chip. The news is happening every day. And China will take their respective action against US too. So I guess we will have to live in this world of these two power is going to fight all the way, and how we're going to live in this kind of dual power relationship now. We are in a very pivoting point of this financial war between the both sides, and you can see how US can just report a different job data, it impact how the money flow. So you can see that it's not so clean as what we think it is in the world. There's a lot of power play behind the scene. Okay, so there's so much about Japan, China, and US, how their respective move is impacting the market. Then let's talk about election. Again, the US election, I'm not going to go detail about it, but more of what does Trump win means and what does Harris win means. There's only two slides basically. Um, Trump is talking about America first, more tariff. It's likely to create more tariff because he's talking about America first. He took pushing for tax cut, and likely he's going to stop war because that's what he claimed. He's going to stop Ukraine war and all. Not too sure about Middle East and all thing. There is different report, but I pull out that he's a businessman, so he's not going to put his troop to fight with the other people there or whatever it is, but he's going to say, buy my weapon, and then you can sell more and all things. So, and he's also a traditional oil and gas person, so likely oil and gas sector, whether ExxonMobil and all people will be benefiting from that. And of course, he promised he want to revitalize America, so the infrastructure will likely pick it up. Who knows, the company that is on infrastructure related equipment or services probably will benefit from those areas. So that's kind of my thought around it. And Harris is a little bit hard to read because she's quite, I would say, newbie in terms of this kind of election and all thing, and not clear in her policy. But her slogan is about people. It's about not going back to the old way, what Trump has created. It's about taxing the rich, and you can see the Democrats always about collective joint power against China. Okay, so in the past they have been more for the semi and technology, but again, I think recently the Silicon Valley people is also not totally just purely supporting there. Sometimes they even support Trump too. So it's hard to say about semi and tech now. The green industry is definitely Democrat trying to push for the EV and all thing, the wind power, the solar power. How it's going to impact, I'm not sure. But if she win, it's going to help them. Retail industry, of course, they always free money or at least easier money, more benefit for people in the lower class, then they can spend money. So the retail may help in those areas. That's some of my thought and some of the things I gather from the different area that I pick it up. However, I also noticed that both of them will impact deficit and debt. Why? The next slide will give you an idea. This is kind of from their from their individual campaign plan. This particular website actually put out and estimated how much they will contribute additional in terms of fiscal printing of money. So from the top one is a high bar versus central bar, low bar. That means the most extreme case, how much will create more 15.5 trillion for Trump. And for Harris is 8.3 trillion. At the lower end is 0.3 versus Mr. Trump, which is at 1.65. Regardless of what it is, both candidates will create more debt, will create more deficit for their US economy. I suspect Trump tariff plan will impact inflation more because when you put a tariff on another country, importing another country product, who bear the cost? The consumer. So it will kind of severely impact the cost of the local purchase and likely create inflation. So that's something that we want to see finally who will win. But I guess right now, I think there's different information, but seems like Trump is leading in a lot of their poll that he will win. So it will be interesting. Trump world is a world that is more for America. The rest of the world will be more challenged, I would say, because they don't consider your need, but he only consider his need. So that's something that the world will have to adjust to his coming back. Okay. So that's about this one. Next, 25 minutes. This is about China and Hong Kong market. Again, quickly. China CSI 300 index. If I think last month I did also show these slides, which basically indicate that it has been moving up, and of course it shows that it break the trend line here, but it actually this thing has come down partly because after the October 8, things are not so clear, so things have been more cautious, and that's why it came down. But I didn't break this trend line, so it seems to be there, but the volume is pretty high. So we still need to watch it. If I look at the day chart, wait, let me see. If I look at the day chart itself, then the oops, the day chart. Okay, the day chart does show a difference. Just now that one is a monthly chart, a much wider chart. During this period of the gap up and all things, you notice that the initial September 24th jump, there is a few gap up. Okay, so there will be something. If you guys want to trade China market, you may want to look at this box area. Did they break down below this or even to this level? If it didn't, then it's probably going to hover upward, or so that will be one area to watch where we're going to be likely handle it. So this is a day chart on the CSI 300 index. Uh, and next is, okay, I look at Hang Seng and Tech Index. Why I look at these two? Because I was just looking at also, is a general Hang Seng all up or the tech more up than the general Hang Seng indexes? So I can see that they are all down after the October 8th, but they are all above the recent support. Okay. The interesting thing is tech seems to be much higher. If you look at this, it's slightly close to the 20-day average versus the general Hang Seng index, so which is lower. Their volume is also down, so that's not so good because people are not coming in to buy yet. But again, is holding above this support line and this gap line too here. If you look at it, there's a gap here, right? There's a gap up here, there's a gap up here. So if you draw a line across here, if you don't break below that, usually it should be holding up. So I guess people are still cautious and looking at how the thing going to move. So next slide, I'm going to kind of quickly watching my time. This is kind of a key takeaway summary, but if you ask me what sector will be, so you can read yourself what are the stimulus helping the property sector, reviving the stock, the rate cut, re-lending the loan facility. Basically, it's trying to put money into the economy to create the domestic economy, regenerate it, so that people are willing to spend more and to move the thing. Property sector, partly because property sector has been 25% of the GDP, very huge amount, maybe less now, because a lot of people have their money tied up in their property. So definitely they are using this various way on second home and all to create more easy people to buy. But based on friends that I've talked to who are living in Shanghai and Beijing and all these things, there is some movement. Inner city prices have started to pick up, but not across everywhere. So the people are still cautious on going in. So I guess the property sector will still be very cautious. And if I look at what sector will benefit from all this stimulus, I guess property sector or banking sector are just to keep them living and continue so they don't collapse. Okay, so that's the kind of the job is not to make them big again, but to sustain them. Okay, so that's why I didn't put in the bottom picture on the various sector that likely benefit. I would say is 5G related, generative AI, green industry, robotic, because those are tech industry that seems to be the government is trying to help the SME that is in this industry to be successful, to be less dependent on US technology. So have noticed some Shenzhen SME company that is related to some of this industry, despite the very competitive market in there, has continued to gain profitability and gain some market uptrend. So that's some area that you can look at. Again, just my thought. You can do your own independent study. Macro indicator on China still not very good. I think the manufacturing profitability, the most recent year-on-year data shows that it dropped about close to 30% or something to that effect, which is not a very strong signal that the economy is still booming. I mean, it's not collapsing, but it's not growing as fast in profitability. And then the next one is about the consumption, because they want to drive consumption. The consumption is also not picking up. I mean, sorry about the fact that this is in China, a Chinese language, partly because I managed to only pick up this from one of the video blogger, and since I find it easier for people to understand to pick up rather than search the English data title and all things. You can see that the 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 number here is creeping up, but it's not creeping up fast enough for all the consumption. These are related to their restaurant consumption, their retail consumption, and all those things. It has not really picked up momentum, although it picked up slightly. So it still need, sometimes it takes a while to trigger down the impact on the stimulus. Could be that it just people just need to build confidence before they spend. Okay. Okay, so that's kind of the other area I want to call out. Next is about the China market you want to play. Hong Kong is heavily dependent on China, so it's not as mature market for China. As this picture show, the stimulus package will have impact on how their economy move, and their policy drive their behavior. Sometimes people say is that China is a short-term, long-term bear, short-term bull. That means if there is a bull, it's only a very short-term bull. It's not something like US, you can buy a value stock, hold for long-term, you get dividend and all things. No, this China market is still not as mature, so it's been affected by policy, the behavior. So invest carefully, know where you're investing in, and know when to pull out when it break the trend line and all things. So okay, that's kind of the China market, Hong Kong market kind of information. Last but not least, follow the money. What does it imply? Okay, Cathay Wood sold about 22.3 million of surging tech stock just on 1 of October 26 news. Okay. And Warren Buffett continued to divest some of his stock, and he started to issue yen bond sales. And there's some talk about maybe he's trying to rejuvenate or maybe interested in Japan market again. But again, this may change now with the recent Japan election. I'm not sure how it's going to impact that, but if you follow the money, it may means that, maybe the sophisticated institutional player are taking their profit at a high point now in US. Okay. And they are trying to get a cheap loan when the yen weaken again now. Hopefully using the cheap liquidity to go into market that is down again, like other area. Okay. As for China, there's this one website that I kind of pull out from one of the blogger and a different player. Is quite interesting. I didn't mention the circle in those circle in blue are those. Okay, basically the two arrow here shows these are the big what do you call it, big order volume. Okay. Okay, China way of showing is positive means red, negative means green. So bear with it, because that's how the Chinese look at the number rather than the other rest of the world. Okay. So you will notice that in the past, at September 25th, 26th, 24th, there is a huge amount of big orders, which is basically institution coming in, right? And then after 30th, basically these are mainly played by the smaller player, which is what we call the retail investor. So the retail investor are the one that is still holding the market kind of, because I think they're still positive about it. But I would be watching where the money coming in from the big player, to confirm whether China market is on the positive trend. I mean, the few days ago on the 25th, last Friday, if I'm not wrong, there was some big order came in. But after that, this 2 day, even today, there is nothing much from the big order. So people are still cautious about it. Okay. So what else about besides this follow the money? What else? I guess the impact of BRICS plan. I think they just announced BRICS and also yuan settlement in the global trade has kind of reached a record high of 24%. So yuan power has started to pick up, but of course it will take decades to, if in a currency migration and other thing, when British pound was the main currency of the world, it takes almost, I can't remember, 50 to 100 years before US dollar become dominant. I don't think yuan will have any impact on the world trade derivative market or financial market until later part. But it has certain impact, especially recently the BRICS plan on their own currency or their own payment, digital payment. So that will be interesting to watch because that will impact how the world going to move. Again, that's kind of my thought about follow the money because it means how people is going to park their investment. Okay, I guess this is my last slide. That's all for now.
Chung Wei, there is a question for you in the chat.
Okay, let's see. Let me see where's my chat. What's the question? There's a chat. Chat. What's the question? Let's see. Oh, I didn't see can speak a bit louder. Oh, you shared Cathy Wood sold 24 million. Warren Buffett recently sold almost half of his Apple share. Plus, year to date, Apple announced on AI feature on its latest product. What's your view on this, please? Oh, okay. I guess people like to buy low, sell high, right? It will be interesting to see what the Apple feature because AI feature for the current is still using the what's their company that created together with Microsoft with Copilot one, but their feature is only for English. So it will be interesting to see Apple when they announce their AI feature, does it expand into beyond English language Western countries? Because that will probably helps Apple stocks to gain some share into other market beside the US market because they will have AI features in there. But again, this is still hard to say because I think the other player is also introducing. It's not a uniquely Apple AI feature. Okay, this AI feature can be bought by another company using the features in there. So that's why I'm not too sure whether it's a very strong buy signal for Apple. I guess it's definitely a pioneer or the first mover advantage, but long term it may not be a strong first mover advantage. Is China market not mature enough for long term? Yeah, I would say yes. It's still a momentum play and policy play. So we'll just have to be careful. Yes, you are right. It's OpenAI that the Apple uses, and OpenAI, another company can use OpenAI too. So that's why I don't think it's a special feature of themselves. Okay.
Just to add on about the China stock market, I think there's a fair bit of policy risk lah. I think Chung Wei will agree with me on that. It's not like the US. Yeah, but having said that, I don't think they also want to deliberately kill their market, the Chinese Communist Party. Your thoughts, Chung Wei?
Yeah, it's not to. I think their intention is that if you look at these two countries or US, China has a lot of saving in their people. Okay, people are not spending. People are not willing to take out the money to consume. So the domestic economy is not able to replace the slowdown on their export economy. Okay, and I think what the government is trying to use this stock market stimulus or at least to get people excited on stock market is, when you make quick money, you will be willing to spend, eat in a big restaurant, buy a big car and all things. So there's a tendency people will do that. So I guess they are trying to create the confidence on their own economy. But like what Elijah mentioned, I don't think they have intention to kill their own economy. I think their intention is to create confidence on their economy so that people will continue to spend. The other intention is very clear, is they don't want their property market and the banking sector got dragged down because of all these bad loan and everything. So they are still trying to sort out. So one of the key signals you want to see China economy is to look at how are they solving their property problem. Are they able to rejuvenate through getting cheaper loan to them? People are buying back and all things. That would be something you want to look at. So China market is not for time in the market. Well, unless you're very short, I I personally couldn't read the market that well too. I mean, I was lucky to get into some of the, there's always a good thing there. When everyone is fearful, be greedy. When everyone is greedy, be fearful. So when the market is low and it's a good stocks, even that the property stock Vanka, one of the China property stock, I was very lucky because I bought in when it's very low. Even though it dropped further, I hold it. And the minute when they had the stimulus, it jumped a few hundred, I think easily 100 or 150%. So I made a quick buck and let go, move on. So I guess this is something you need to manage your risk, you need to manage your portfolio. It's just like any government, when they give you free money or when they give you incentive to buy certain thing, of course you observe and do your own assessment to take the benefit when you can. That's it, I would say. In more tech stock selling recently by those big guys, like, yeah, that's true. That's why I say when the big guys are selling, I guess we have to be careful. I hope I answered all the questions.
Seems like it. Okay.
Cool.
Let's carry on to the SRS part. Just going to have to stop the
Yep, I stopped the share.
Okay, thanks. All right. So thanks, Chewy, for the market update as always. I'm just going to switch the screen to SRS, which is what we're talking about today. And of course, just a quick overview. We'll answer the questions, and of course, at the end, we'll talk about the share transfer program that some of you have been asking about, which is actually just announced this month. Okay, so SRS, very straightforward. It is a scheme relating to our Singapore tax system, and I will just share that ultimately the Singapore tax system is what we call progressive. So the higher your chargeable income, the higher your income tax percentage that you pay. And that's just straightforward. Later, we will take a look at a chart that shows you what I mean. Okay, and this table you see on the screen here is basically highlighting how you get certain line items in your income tax breakdown. Basically, whatever you earn minus whatever allowed expenses is considered total income. Any donations that you have made, you take that off, you get accessible income. And then whatever reliefs that are applicable to you, for example, CPF relief, SRS relief, national service relief, then you subtract that and then you get your chargeable income. So I think the most important thing is ultimately what is your chargeable income that determines how much income tax you're going to pay. Okay. And of course, what kind of reliefs we have, there's a lot here. Today's not about the reliefs, we're just going to talk about SRS, but you can see that there's a lot of reliefs that are potentially available for you. And I will encourage each and every one of you to explore the IRAS website to see what's applicable. Most of the time, they will just actually grant you the relief automatically. For example, CPF relief. It's just based off the records of your work, contributions to CPF. Okay. If you're an employee and your employer just contributes, then the records will be automatically updated. Things like NSBAN relief, earned income relief, all these is automatic. Some of them are you got to apply for it once, and then after that it'll be automatic. Okay, so there are other reliefs here as well, but today we'll talk about SRS relief and answer your questions. Okay, so there's some things to note. Actually, there are some changes coming up with tax system. Okay, so for example, one thing for sure is that you used to be able to get some tax relief if you, say, for example, contributed money to, say, your parents' retirement account if they had not hit the full retirement sum and if they earn less than 4,000 a year. Okay, we call this income threshold for dependent related release. Okay, from 2025 onwards, it will actually be increased to 8,000. Okay, so I think that's a nice increase. Okay, this will be applicable for spouse, parent, qualifying child, working mother, and a few other dependent related reliefs lah. Okay, for the CPF match retirement savings scheme, that no longer attracts a relief. Okay, even though there's a matching tower from government. And then one thing is, previously I showed this, the fees relief that will actually be removed by, I think, 2026. So that's something you need to take note of if you have that kind of release that you've been claiming. Okay, so what's the SRS? Is really just a scheme, okay, from the government to address your adequacy and retirement funding, and it is voluntary. Okay, so please remember, you contributed to SRS. Okay, you are not required to do so every year after that. You can contribute this year and then take a break. Okay, so for example, if you are a working mother, you contributed, and then after that you had a kid, and then you're eligible for working mother child relief, which brings your income tax down. Okay, and then you find that, oh, actually my income tax is manageable, then you don't have to contribute for your release to SRS lah. Okay. Next thing to note is that so this is what I mentioned is optional, and of course whatever you contributed up to the limit is tax deductible. You'll form a relief, and these are your limits. Okay, 15,300 for Singapore citizens or 1,275 a month. Okay, and why I say this is because I have some clients who are their jobs are quite stable, civil service, but it is always painful to have to transfer a 5-figure sum to SRS at the end of the year. So what they do is every month they set out a standing instruction just to transfer 1,275 into their SRS account directly, and they don't even need to think about it. It just happens every month. Okay, and then for foreigners we have $35,700. If you are a foreigner who had just become a PR, okay, then it's prorated depending on how long you are a foreigner and how many days left that you will be a PR or citizen. Okay, so the benefits of SRS, as I mentioned, okay, you can reduce your taxable income for every dollar you put in. And just it's important to note also that there's a maximum relief cap of $80,000. So working mothers who have the old scheme of working mother child relief may actually be eligible to, not eligible, but actually not even need to contribute SRS, because I've seen some parents that are working, some high income mothers they are working mother child relief is in the order of $50,000-$60,000. So there's no need even for any kind of relief. They will just hit the 80,000 cap straight up. Okay. Of course, once you put it in, you can't take it out that easily. Okay, but you may actually you're supposed to take it out for retirement. That's why it's called supplementary retirement scheme. And when you hit the age that you can take out, and the age that you can take out is either 62 or 63, depending on the year that you open your SRS account, then of course you won't be taxed on 50% of what you draw. So in other words, if you draw say 10,000, okay, they will take it that you only draw 5,000, and then they will tax you accordingly on 5,000. Okay. Someone asked, can I claim relief for your son's postgrad course? No, the course relief is only for courses applicable to you and your field of work. Okay, so you can't claim for anyone else other than yourself. But of course, if your son take a postgrad course related to his work, he can claim for himself lah. Okay. But anyway, that's also going to be going away because it's replaced by Skills Future. That's the whole point of the removal of the cost relief. Okay, so some questions we saw about how to withdraw SRS and without incurring tax, right? So it's very straightforward. You can withdraw up to 40,000 a year for SRS account without paying tax once you hit your withdrawal age. Okay, and the reason is because 40,000 a year, as I mentioned, 50% will be considered, or rather will not be considered for taxation, and the remaining 15%, which is $20,000, will be considered for tax. Now, $20,000 is actually right at the point where there is no income tax. So 20,000, the income tax starts at 20,001, right? 20,001. Okay, I have terrible handwriting. Let me try that again. The income tax starts at 20,000 and 1 to 30,000 for the first bracket, which is 2%. Now, will this change in the future? Frankly, I hope so, because incomes are going up. So actually, we've seen the tax brackets, from the 20K to 30K. Okay, many years ago, the tax bracket was 4%. Then it dropped to 3.5% tax, and then now it's at 2%. So who knows? Maybe in future, the first $30,000 of income will not be taxed at all. And in that case, you could withdraw 60,000 a year from SRS. So I'm hoping that will come someday. Maybe not now, but maybe 10, 20 years in the future, that'll be a nice thing to have for quite a lot of you, right? Okay. So that's what I mentioned. Okay. And of course, if you want to withdraw SRS anytime, meaning before, okay, so in other words, it's considered early withdrawal, you can. So I would say SRS is still liquid, but you withdraw it before the retirement age, okay, that is applicable to you, 62 or 63, okay. The whole amount will have a 5% penalty, and the whole amount will also be considered income and subject to tax accordingly. So if you withdrew 100,000, okay, and you haven't done 62 or 63, okay, from your SRS, you withdraw 100,000, there's a 5% penalty of 5,000, and then the 100K, the entire 100K will be considered your income for the year, and then there's income tax on top of that. So while it is possible to withdraw, I would actually highly encourage just keeping it inside SRS and not thinking about withdrawing it. It really should be the last resort. Okay. Question: can I use SRS for MMF? Yes, you can buy MMF with SRS if that is what you wish. Okay, although SRS being a long-term kind of thing for retirement, Frank, I would feel that there might be better alternatives. Okay. Okay. So you withdraw, as I mentioned, I think I mentioned all this before already. You withdraw at or after the statutory retirement age, then you can actually have 10 years to withdraw. And after the 10 years, your SRS account is deemed closed. Okay. And then if you have any balance at the end of the 10 years, okay, you will be subject to income tax at that point in time based on the value of what you have inside. Okay. And one good thing is that you can withdraw in the form of investments. In other words, you have shares, okay, in your SRS account, and you want to the old way was you had to sell the share, withdraw the cash, then buy the share again. Now you can just directly transfer the share from your SRS operator to CDP. And the way to do that is you have to ask your bank. Okay, because SRS is actually operated by the banks. Different banks will have different protocol. All right. But you withdraw before, as I mentioned, there are some penalties. I've already mentioned this previously. Of course, there are certain exceptions. Like if you are no longer around, or there's medical grounds, or it's bankruptcy, then of course some waivers may be granted. Okay. So, and of course, if you're a foreigner, certain criteria will allow you to withdraw before you turn 62. But please always double check and make sure you fulfill the criteria. Okay. And the statutory retirement age is 63. Okay. But you open your SRS account some years ago when you're 62, then you can start withdrawing at 62. Okay. Got a question about private annuity. You can buy retirement income plans and annuity. Okay. Is it recommended? It's hard to say without looking at your entire portfolio, because SRS is only a part of your entire retirement portfolio. And if you surrender an annuity, it depends. If your SRS account is still open, your SRS annuity surrender value will go back to SRS. But if you've already closed your SRS account, you surrender the annuity, it'll be in cash. Okay. Okay. So next thing, what are the tax rates? These are this year's tax rates that will apply going forward. So if you actually see the numbers, as I mentioned, the first $20,000 has no income tax at all. So I think that's a great thing. And of course, the next $10,000, 2%. So that's $200. So actually, you think about it, even if you need to withdraw 60K a year for SRS, let's say you have 600,000 SRS, okay, you would be subject to income tax on 30,000, and that is $200. Now, if you are actually contributing SRS, I would highly recommend that you start considering SRS after 80,000, because there is some after 80,000 of accessible chargeable income, because there is some tax savings to be had. Okay, so you actually will be saving quite a fair bit. And remember, $200 of income tax is $200. We're talking about $200 in the future. Okay, but today, let's say you contributed 15,300 to SRS. Okay, and you were at the 11.5% tax bracket. Okay, you will save 11.5% of this 15,300, which is actually around 1,700 plus 17, I think it's 176 something. I'll just write 17XX. Okay. So you think about it, you've actually already saved $1,700. It's a straight up savings. So in the future, even you have to pay $200 in tax, I would say that is actually negligible. And that is provided the income tax bracket here do not change. SRS is very viable naturally from this point onwards. Okay. Yeah, and even I have clients who are private sector specialists, and even 23% of 50,300 is a savings of, I would say, $3,000, and yeah, they'll take it. Unless you tell me you like nation building and want to contribute to the government. If not, I think anyone who can legally save tax will want to use this method to save on your income tax. Okay. So how to calculate how much income tax you're going to incur? So every year, of course, 2025 is not here, but every year, okay, the IRS web page will actually have a income tax calculator that you can then download and use to compute and see how much income tax you can expect to pay. But I personally think it's too late because, if you download this calculator in April this year, for example, okay, April 2024, all you can do is know the number, but the actions you need to reduce your tax must have been taken in 2023, not 2024. So I think it's a good thing to always at the end of the year sit down, do crunch some numbers and then see if SRS works for you, or even if SRS works for you, you want to see whether you want to do other schemes like donations or topping up your parents' retirement account. All these things should be taken before the end of 2024, so that by end of 2023, for example, so that by 2024, you can download the calculator and compute your income tax numbers. All right. Okay. So just to take note, an SRS account is open with the 3 local banks. You can do it online, no need to go down. But take note that the interest you earn is 0.05%, which is basically nothing. So I can understand why earlier there was a question on buying MMF with SRS. It is something you can do. Okay. Just be aware the MMF is fluid, but still I would think the return on MMF definitely beats the interest on the SRS account. Okay, so of course you should not just leave your SRS sitting around doing nothing. If you do nothing, you end up with, well, nothing. You just end up with whatever you have inside as per what you contributed. But even growing your SRS at a modest rate of 4% will mean that over 20 years, if you had contributed every single year, okay, you end up with quite a nice chunk of money for retirement. 456,000 is like winning. Okay, I can't say Group 1 Toto, but it is winning quite a sizable amount of money, almost like a Group 2 Toto or something. I don't gamble, but I think it's quite a sum of money to have for retirement. Okay, so always invest your money, because investments takes time to compound. Okay, you can see here that 0%, yeah, 15.3, 4%. You see here, 15912. Right. You may be tempted to say, oh, it's just $600, but you do this over a long period of time. The difference here is 150,000. Okay, and no one will say no to 150,000, but it's just that you're gonna need 20 years to do it that way. If you are good enough or to grow it by even more, congrats, right? That's all I can say. But then you have to plan your withdrawals carefully. Okay, so what can you invest in? I will not be touching in depth on each instrument, but I will just give my quick view. Okay, fixed income, you have T-bills, you can buy SSB and FDs, etc. My take is I wouldn't really bother with SSB for one simple reason. The coupon comeback is usually some tens of dollars, maybe $100+. It will go back to your SRS account. And then you will find it very hard to reinvest it because you can't really buy anything for that amount. All right, so I would rather just skip SSBs. Even though I know that the rates previous months have been quite okay, but it just doesn't suit It just doesn't work the way I see it as it should work. The SSB provides a coupon payout that I cannot use. Then what's the use of a bond that gives me a coupon I cannot use, right? T-bills, same thing. Okay, T-bills is not really a coupon, it's an upfront coupon, but same thing, you then face reinvestment risk and you need to always monitor. FDs, same issue. I feel I will always remember to renew my FD and then I face reinvestment risk. Okay, so fixed income, not a very fantastic view. Not too fantastic in my opinion. Shares, REITs and ETFs, you can go into SG listed shares, REITs and ETF. This might be another option, especially for those of you who are, say, stock traders. Okay, you could buy and sell, or you can buy and hold, and then later on for retirement, you can then transfer to CDP. The issue here is that same thing, the dividends, when they come out, you will go back to your SRS account, and then you can't really do anything about it. It might be tens of dollars and then it's stuck. Okay. Just take note, when you transfer to CDP, I will when you're withdrawing SRS and you're transferring shares to CDP, it's always good to transfer as much as you can during a market low, so that you will actually transfer. They'll count your the transfer amount out at a lower number, so it allows you to actually transfer more. So for example, you have 100 shares of DBS at $39. You transfer now at 39, it'll be considered $3,900 of withdrawal from your SRS. If the shares drop to $30 and then you transfer, it'll be counted as $3,000 of transfer. So that's quite a fair bit of difference. So try and transfer during a market downturn where possible. Okay, unit trust for DIY investors, of course, we are not going to say no. You can always DIY your unit trust. And the good thing about unit trust is that you can actually invest in foreign markets. Okay, unlike shares, REITs, and ETF, which must be Singapore listed. Oh, and one more thing. If you're buying REITs, for example, okay, and then there's equity fundraising. Okay, recently CICT had equity fundraising, and I think Parkway Life also is having a fundraising exercise soon, or is it ongoing now? I can't remember. Okay, if you're subscribed with SRS, and then your account in SRS has no more money left, okay, you won't be able to subscribe to the rights issue. You, assuming that year you already maxed out your SRS contribution, you cannot subscribe to the rights issue. So this is a danger I see, because some people, they contribute at the start of the year, they invest, and then let's say this year you contributed 15,300 already, and then you bought Capital Land Integrated Commercial Trust, CICT, and then in September there was that rights exercise, but your SRS account maybe left $10, $10 or $100. It might be very, very difficult for you to actually participate in the rights because you cannot contribute more already, and you don't have enough cash in the SRS account to apply for the rights. So in this case, one of the options is actually you'll be forced to sell your other holdings to raise cash if that is what you really wanted. So just take note of that. Okay. Unit trust, you can tap into unit trust that are SRS approved. Okay, just because the unit trust is cash approved doesn't mean it's SRS approved, but just take note, you can tap into that. And I think one advantage is that you can go into foreign markets with SRS unit trust. Okay, so you're not limited to just the Singapore market, which I feel that is more geared towards income investors. Okay, for people who may face a bit of challenge in not knowing what to invest, then of course we have advisory portfolios, which will then help to create, craft, and then manage the portfolio in a diversified manner, and then go for growth in that aspect. Okay, if you prefer to invest in foreign shares, okay, by right you can't because of this part I mentioned here. But if you go into managed accounts, then of course you have the option to directly invest into your foreign shares. We'll show you a screenshot of that later. And lastly, if you are defensive or you prefer less drama when it comes to your retirement and you just want a stream of income from your SRS, then of course retirement plans or annuity plans, which are all single premium, would be an option to look at. Okay, that's what I can say. Okay, is there a right answer or wrong answer? No. Everything here is viable. It's just what's your view. Some people still think they want to do fixed income. I don't personally, but if that's what you think suits you, then feel free to go ahead. Okay, but SRS being a long-term growth vehicle, assuming you start contributing now and you have at least 10 to 15 years before retirement, then you should actually explore growth in my view. Okay. Okay, so just take note, some banks may have fees and charges when it comes to SRS. So this one, you will have to check with the banks. All right. Okay, so before we answer your question, so the idea really is that when you accumulate your SRS, okay, every year you accumulate, as you grow, okay, that's not a very well drawn circle, but as you grow your SRS monies, and this projection here is at a 2.5%, very, very doable. Okay, you actually build up the value of your SRS portfolio, and by the time you want to retire, okay, you decumulate, say over 10 years. This actually provides a tax-free stream of income for you. Now, this 39,000 a year or is at a base of a assumption of 2.5% growth. You get more and you just have more for retirement. I feel that this is something that if you have an SRS account, you can actually look at investing it. That's why I say it's for long-term growth. Imagine if this was 4%, then you have like 45,000 a year, something like that for 10 years for your retirement. And I think that can only be a plus because we always know that in the first half of your retirement, you tend to have more energy and time to do things. But to have energy and time to do things, you also need one more thing, which is money. And where's the money gonna come from? For example, you truly retire at 62, like some of my clients, CPLI is not ready to pay you. You might want to use your SRS to start drawing down on that to fund your retirement travels or whatnot. So that's something to think about. Okay, so we get on to the questions. Okay, so I'll answer these, and then after that I'll wrap up with the CDB share transfer, and of course Chewy may have closing words later. We'll see how. Okay. This question asks, if I want to start withdrawing SRS fund, how should we do it when SRS fund is still tied up for investment insurance? Now, whoever asked this question, because I am only given the questions, I do not know who. Okay, I will just say your investments can be directly transferred to your CDP. Okay, I assume this is this is say Singapore shares, right? Okay, so I don't see that as an issue. But for your insurance, you also have to look at when do they start paying out. Most insurance invested with most insurance plans that are bought with SRS tend to be either retirement income or endowments with payouts, right? So I will say I can't really give a very all-inclusive answer without knowing the details of your portfolio, but you may want to look at the key points in your insurance policies as to when it matures, when the payouts start, and then build your withdrawal strategy around that. And then whatever things you withdraw, then if there's still a buffer to withdraw more, then that's where you add in your investment withdrawals. And that's how I would do it. But it really needs planning. And this is something that will require a discussion with people. Okay. Okay, next thing, how much can we withdraw every year? Okay, this one I mentioned right now, 40,000. Okay, because of that 40,000, 20,000 will be considered income. One more thing to point out, this assumes you stop working already. If you are working, no point withdrawing, honestly. And also, this also assumes you have no other source of income, meaning not just work, but some of you here may have rental property. And rental income will actually count towards your income. So if you have rental income of 10,000 net a year, then you withdraw 40,000 for SRS, your income that year is considered 30,000 because 10,000 came from property and 20,000 was from SRS withdrawal. So take note of that, okay? But assuming you have no other source of income, then it's 40,000 that you can withdraw, okay? This question, I suppose the question is it recommended to pledge property and withdraw half of RA to buy annuity plan? Okay. You're not going to sell your property ever. I suppose pledging a property is an option. Whether it's the best option is another thing. Okay. And withdrawing RA to buy annuity plan, I suppose this person, you're worried about policy risk. Okay, because we have seen earlier this year that government can change policy. SA used to exist. Now it will no longer exist for those past 55. All right. So policy risk is always there. If you're worried about policy risk, you're worried that CPLI starts too late and maybe push even later to 66 or 67, and you just want to have a sum of income, then annuity plan is an option to create that sum of income. It's just that, is it the best step for you? This one, it varies from person to person. So I would say that personally, if you have FRS, I think that's the minimum anyone should go for. And then you can then consider an annuity plan after that, especially since there's no more SA to earn 4% after that, right? And then some people have ERS even, and then they still have money and they still want annuity plans. Nothing wrong with that. All right. Next part of the question, when the fund go, you surrender SRS annuity plan. If the annuity plan, your SRS account isn't closed, then your money goes back to SRS account. If your SRS account already past 10 years, you withdrawn, the annuity plan still paying you, then it's cash to your bank account. All right. Next question, which ETF can I use SRS funds? Right now, if you're buying on your own DIY, anything listed on SGX, okay? And if you are doing managed account, you can have access to, say, S&P 500 VO ETF with managed account, or in fact, almost any other ETF available that is, basically non-Singapore markets. But DIY, you are only allowed to buy SG listed. Okay. Any funds that will give more than 6% annual returns. Okay, I think a fund can give more than 6%. I will not deny that, but then it can also give minus 10%. And are you ready for that? So it's not about the return you get, but when the market starts to turn bad, okay, then you have to take note that you buying a fund or ETF or whatever, any investment really, you have to prepare for losses. I think this is something that a lot of people often overlook in their chase for returns, right? Instead of chasing high returns, I would actually say you should be looking at a reasonable return, okay? Not a high return, because high return tends to imply that you will take on some kind of risk, okay? So funds that give more than 6%, plenty, I would think. But it's just that when the crash comes, most of the time, even though logic says would say stay invested, a lot of people actually don't stay invested. I've lost count how many people in a panic pull out during the COVID crash in March 2020. Even though that's 4 years ago, I've seen a lot of people pull out because they mentally could not take it. And you will only know when you can take it or not when your money is truly inside. So just take note of that, whoever asked this question. I don't think, there are plenty of funds, but in fact, you can go points and filter funds that return 6% per year over 3 years. But when the crash comes, can you stay invested? I think that should be the question you would ask yourself. Okay, this question is about SRS to buy annuity plan. Answer is yes. It's all single premium, SP, single premium. What are they? Okay, the thing about annuity products is that it's always evolving. And I think you would ask me what's available now. Separately, I can pull out a list and show what's available. There are plenty of annuity providers, there are plenty of retirement plan providers, there are plenty of endowment providers. You got Manulife, Singlife, NTUC Income, AIA, the usual suspects. Right. So I think what's more important to ask is an annuity plan something that would fit me? I think that's actually the more important question to ask. And then leave the finding of which is the best plan to like the team, right? That's because that's our job. Okay, this one's interesting. Use SRS to buy SG Bank share. Is it a good strategy? Personally, I don't buy with SRS. Okay, I think I've shared this earlier. Dividends will not be paid to me. They'll be paid to my SRS bank account. I like to use my dividends for my bank shares to spend on what I need to spend, bills and things like that. But okay, now if you were able to catch DBS at the COVID low or anywhere near the COVID low, okay, and then you manage to sell it away when it hit like $38, $39, so like from $20 to $30, that's a good strategy. Anyone can I think everyone will agree that that's a good thing. You double your money in like 4 years, which is not easy to do, right? This I would think is a good strategy, but again, you will need to have you need to be able to enter at this point and then exit at this point, okay? And then after that, of course, you take your gains and then you go and look for something else. And to me, this is more of a long-term strategy. So would I say that using SRS to buy bank share is a good strategy? It can be, depending on what type of investor you are. But as an income investor myself, yes, I make some capital gains on my bank shares. But I think the difference is that when I sold them, I can pocket my gains in cash and then use it for other things, like, I don't know, buy on a holiday or something, right? Whereas even if you realize a profit on DBS, if you make 100% from SRS, your DBS shareholdings, right? Yeah, it's 100%, but it's still in SRS, and then you can't really touch it. Okay, so if that's important to you, then maybe you might want to use cash instead. Being able to touch the money if it's important to you. Okay. Which investment instrument provide a stable long-term growth with minimum volatility? What I can say is you cannot expect minimal volatility if you are investing. There will be some volatility. The money market fund will be the closest to minimum volatility because it's pretty much a slow upward trend. Okay. And is it stable? Yes. Okay. Is it long-term growth? Yes. But is the growth sufficient? And then a lot of people will say no. Because money market funds, long run, don't return 3%. Although it's good now, but please understand that, in the long run, it's definitely not going to be a 3% kind of instrument. Okay. So I will say is this I would actually ask with acceptable volatility, not minimum. Okay, what can you accept? And you can't accept it, there is nothing wrong with that. It might be actually a sign that you should not really overly invest, or you should not be considering certain asset classes because the volatility is just too much for you to stomach. So just my take on that. Okay. So yeah, my closest would be, I guess, MMF right now. But it's not really a long-term tool, as I mentioned. Okay, everything else that is an investment, you will have to go through ups and downs. And yeah, some people may not be able to tolerate that. Okay. Okay, these questions are roughly the same. Best investment category, what to buy, how to invest. Okay. Now I would really say that if you are new to investing and you have put money in SRS and you're wondering what to do now, maybe have a chat with an advisor with our team, because it is really not easy to answer this question in the context of Ask Me Anything, given the time constraint. Plus, there's like 60 of you here, and I think there'll be 60 different risk appetites, tolerances, 60 different circumstances. Some of you are young, some of you are retiring, some of you are retired. So what's best is very specific and subject to you. What to buy, again, specific and subject to you. How to invest, this one's slightly easier to answer in the sense that you can either go on your own, okay, but then you have to do your own research and stuff, or you can work with the team, and then we can craft some portfolios, and even maybe I've actually met people whom I've had a word with there, and it turns out that after that discussion, they are really truly more suited to DIY, and then we'll point them in that direction. So it doesn't mean that you have to invest with us, but sometimes if you like the clarity that you need on how you should proceed, then having a word with your advisor is harmless and it's free, right? Okay. So once you start SRS withdrawal, can you retain SG share in POEMs? Actually, the shares are held with the custodian bank for SRS. So when you start your SRS withdrawal, the share will be moved to CDP. Okay, but after you do that, you want to transfer into POEMs, we won't stop you. Okay, so I hope that answered the question. Okay, given the nature of SRS only can withdraw from 65, actually more like 62 or 63, but of course you're working, you don't have to withdraw. Okay, so the question is, what kind of investments will be more suitable? Okay, frankly, there is no correct answer again. Some people have a lot of stocks in SRS. I have a client whose SRS portfolio is 100% stocks, but she is a stock investor. Still, she did ask, what should I do? Because she is about, I think, 6 years away from 62. Okay, so she's in the mid-50s, late 50s. And the plan to start the withdrawal has to begin now. You cannot reach 62 and think about, okay, what do I do now? I think that might be a little too late. You might want to start, realizing profits, moving to safer instruments, stepping down the risk profile of your portfolio towards your desired SRS withdrawal age. And then at that point, you will then convert your SRS portfolio from something that is invested to something that is able to be withdrawn, meaning instruments that suit your retirement goals. Okay. So now having said that, stocks, bonds, and annuities can all suit your retirement goal. It's just what's your allocation to that, and that's another thing that we will pay attention to for you. Okay. Okay, so what's the role of SRS in retirement portfolio? Too big to say. I think everyone who should have some SRS for your retirement portfolio, because ultimately SRS is another source of income. And when we talk about retiring, we need multiple sources of income. Okay, you can't just rely on CPF Life. Okay, you need to rely on other things. Okay, things that I would say are within your control. So SRS is another layer. Retirement plans are another layer. Stocks are another layer, so on and so forth. Stocks, REITs, unit trusts, what have you. Okay, so SRS role, in my view, is another layer of income for you, and no one's going to say more to more retirement income. Okay. Okay. Question is very customary to park SRS. I've never been a fan of parking SRS, honestly. I feel that you should invest your SRS. Not invest. I'm not saying invest fully, but invest based on your situation, your preferences and your risk appetite. Okay. Some people do RSP, for example. So that's not investing fully, that's like slowly investing over time. Okay, so where to park SRS? Frankly, please don't park SRS, especially if you're at least 10 to 15 years to retirement. You should really just go and invest it. That's my take. Go and invest your SRS. Make sure that you can grow it. It may go through up and down cycles, and then you will then, if you have enough time horizon, you should be able to ride it out, and then withdraw in a nice strategic manner when you retire lah. Okay. How to transfer shares? Okay, this one, as I mentioned, ask the bank, because every bank's protocol is different, but the banks are your SRS custodian. They will know, or they have their own procedures for transferring. Okay, so ask the bank. Okay. More of where's the best way to park. So again, it's not about parking, but it's how you allocate your portfolio. Okay. And once you allocate your portfolio, you need to execute, right? And then, of course, the point at where you turn 62, okay, your asset allocation will be always evolving before 62 and after 62. But I would say that maybe by 65 onwards, it should more or less settle into a steady state, and provide income for you. And question here is it advisable to contribute more funds after retirement? Okay, frankly, if you retire, you should just take out your SRS and spend. I would not contribute unless there is reason to, because if you retire, I would suppose you have no more income tax to pay. And SRS friendly is just to reduce your income tax, in my view. Okay, so if you have no income tax and you don't need to withdraw SRS, I don't really think it's very critical to contribute SRS unless you're doing one of those 11-year hacks things. But if I really have no retirement income, I would not contribute anymore to my SRS. Okay, whether I take it out or not, it's of course depend on my plan. Okay, I've currently retired at 60, now 62, 63. They are still not planning to take out SRS yet. Okay, question, can SRS allow endowment transfer out? Well, your SRS endowment is still in force at year 10. It has to be transferred out, and the tax value of the endowment will be taxed based on 50%. Then after that, your SRS account is closed. Okay, so that should answer the question. Can retirement plan pay out beyond 10-year withdrawal? Yes, a lot of people may have this popular plan called SAIL, NTUC SAIL. SAIL actually pays out for 20 years, which means that if your SAIL plan starts paying out at 60 and it will end at age 79, and then your SRS withdrawal is here to here, 62 to 71. Okay, at 71, when your SRS account closed, your SAIL plan is still paying you for another 8 years. So yes, it can continue to pay out. Okay, it all depends on how or what you bought lah. Okay, and yes, the most popular question, surprisingly, can talk about asset closing. So money will go where? Can withdraw? Use it to pay housing loan. Okay. When the SA closes next year in Feb, for those above 55, and when the SA closes next year in the second half of January 2025, the money will go to your OA. I'm assuming you have full retirement sum already, all right? Okay, the money will go to your OA, okay? What you do after that is up to you, okay? There's no right or wrong answer. Some people say that, okay, I'll use it to pay down my housing loan. It's a fair answer, okay? There's nothing wrong with that, okay? Some people will say, can I withdraw? Yeah, because you'll be above 55. And then you only have OA already, OA, MA, and RA. Okay. And anything in your OA above 55, you can withdraw. So you can withdraw it, or you could let it sit there and earn 2.5%. Okay, which is the concern that a lot of people have, because 2.5% is just so different from the 4% that people are used to when they did CPF asset shielding. But I think there must be a shift in our perception of this, because this 4% was always too good to be true. And when come next year, when it's gone, we have to accept that 2.5% is actually the norm as it is supposed to be. And the question, I think, will be more of, can I construct or allocate my CPF money to get more than 2.5% relatively safely? And to that end, I would think the answer would be yes. Okay. If you have missed last week's Ask Me Anything, I shared a barbell approach, meaning that the bulk of your money can sit in OA and generate 2.5%, and there's nothing wrong with that. But if you have, okay, so let's say this is 50%, okay, in your OA. 25% of your money can be then redeployed into something for, I don't know, growth and something for dividends. So if you're projecting a 4% on your dividend portfolio, 3 to 4%, safe, okay? Safe, not say safe, safer, okay? And your growth, you're projecting 5%. Then this combination, 5% on a quarter of your money, 3 to 4% on another quarter of your money, and 50% on the remainder of your OA, should actually yield close to 4% overall, which would mean that you can still get 4% in a relatively safe manner. Okay, I call this a barbell approach. Of course, is it 25%, 50%, 25%? It'll depend on how much you have in OA and what you feel like doing. Some people even say that, no, I want to reduce this OA portion to 25%. I want 75% of my money to be deployed. Some of you have already started doing that. Nothing wrong also. You know, some people say I want 75% of my money to be deployed to generate higher than 2.5% return. So I think the goal is not to really go for maximum growth, but in a safe manner, construct a portfolio that once you average out all the returns, you are getting close to the 4% that you used to expect with SA. Because we cannot expect that 4% anymore. All right. So that's the last question, I think. Is that the last question? Yeah, okay. But I know you're asking about the CEP share transfer thing. So just let me bring out the slides for a moment. In the meantime, while I bring out the slide, Chewy, do you have anything to add?
I guess that nothing much, but maybe just a quick note that as we are approaching the election and US election, and the fact that uncertainty is not being liked by Wall Street. So when things are more clearer, people tend to be more confident to invest. So I think this is the period where it can go either way. So it's back to portfolio management. Those making profit, you will feel that you want to take profit, take profit. Those that is higher risk, you want to reduce the amount of risk, then you of course adjust your risk. I guess at this juncture, maybe good to keep some cash where if there's a market adjustment, there will be a good chance for you to go in. So don't overcommit when the markets continue to go high. Especially AI seems to be running too high in my opinion.
Yeah, I am also scared of that. Anyway,
Yeah.
Okay, so CDB share transfer, just give me 5 minutes and we'll wrap this up. So some of you may have heard of this thing. So basically the CDP share transfer program, okay, transfer your CDB shares and according to this nice little brochure website here, get some smart park credit. Okay, so what is it really about? So right now, or rather not right now, for the past 1 month, we've actually had a share transfer scheme, okay, whereby you can mass transfer all your CDB holdings to POEMs. So the custodian will be POEMs. Now, what's the advantage of that? Okay, is that there are a few. So let me highlight some. And the first thing is full portfolio view. So you consolidate your share ETF and yes, even your T-bills, you can transfer your T-bills into POEMs. Okay, you are able to see your entire portfolio. Okay, and you can then make decisions at your portfolio level because sometimes you may have holdings here, you may have holdings there. You know, you may have foreign shares in POEMs, you may have Singapore shares in CDP, and then you need to like know how much is foreign, how much is local. Are you too invested in the foreign markets? All that. It will be a lot easier when you consolidate everything, and then you can also know like how many percent of your portfolio, your investment portfolio is T-bills, is shares, things like that, right? Okay. So once you have a full portfolio view, it will be a lot easier to make this kind of investment decisions. You can then decide how best to re-optimize your portfolio. Second thing, okay, if you receive dividends from your shares, your holdings, okay, and the maturity proceeds from say T-bills, okay, they actually will be credited to money market fund. And as we know, you know, instead of the bank account direct crediting, it's credited to money market fund. And as mentioned earlier, money market fund is running at a pretty decent rate now, 2.8, 2.9 maybe. And that just allows you to earn more because I just got my CICT dividend earlier in the month. It went into my POSB bank account, and I know it will earn 0.05%. Okay, so yeah, but this is just one thing. Okay, right now we're running some promotions. Okay, you can receive up to $588 in MMF when you transfer your shares. Okay, this depends on how much you transfer. Okay, depending on the value of your assets. Okay, if you have more, you will receive more, up to 588. Okay, so effectively, I can't free money, maybe. Okay, so just take note, however, the MMF credits will not be credited immediately. I think it will be credited, I think after 3 months, if I remember correctly. Okay, but yes, it is an ongoing promotion, and at last I checked, it is still not fully redeemed. This is only eligible to the first. There's a number there's a first few customers who get it. I think it's a couple hundreds or something, but it's not fully redeemed yet. Last I checked. Okay. Next thing, okay, corporate actions. Some of you may worry, if my shares are no longer in CDP, they're in POEMS, how do I manage my corporate actions like my rights subscription? Okay, you actually manage them through POEMS, and actually you can, since your broker will be able to see what your corporate actions are. You can then actually seek professional advice on these matters. Okay, so that's one thing. So corporate actions shouldn't be an issue or a hassle. Okay, share lending. Okay. Some of you may be familiar about the practice of lending out shares to people who are in need of them, short sellers maybe, okay, to earn a little bit of income so that they can close their positions, those people who borrow the shares from you, okay, and then pay you a small fee, okay, instead of being fined 1,000 by SGX, okay. Now you can earn from that, okay. If the shares are with us, with the custodian, we can actually, do that for you, okay. And of course, you can actually then, once you consolidate everything, you can then do a proper portfolio review instead of just reviewing your Singapore portfolio or your unit trust portfolio or what. You can actually transfer everything in, and then you can get a portfolio review. Okay. After transferring, this will actually be with us. Okay. And of course, some people may actually be holding on to stocks that maybe are not performing, but sometimes you find like you're not sure, should I let go of these stocks? Is there a hope for recovery for this share or this company or that? Once everything's consolidated under one place, I think it'll be a lot easier for an advisor to actually help you to review, make a professional recommendation to a portfolio and help you to reallocate. And I think this will help you to optimize your investment portfolio to do better, and at least you feel better knowing that you've done something to improve the health of your portfolio. So this is a portfolio review that the team can actually conduct for you after the shares, the holdings are transferred in. So how do you do it? Okay, I've outlined the steps here. So you need to first click on account management. It will bring you to stocks by default, and then you click on online forms, and then there is this CDP mass share transfer request that you will then click on. You click on that, it brings you to this screen. Okay, I screenshot my own one but of course can't share too much. Okay, now you should see your details here. Okay, and then of course your CDP account will be there. Now what's important is that when you transfer, okay, you will actually be asked what account to transfer to, and it's important that you transfer into the team. Okay, you can see the team's code here, PS1. Okay, so that we are able to follow up the transfer for you. And of course, after that, once everything's in, we can consolidate, see, and then provide the necessary advice for you if you need that advice. So once you select the right account, okay, you can then click submit. Okay, and then the transfer will just take place. Okay. Now, okay, about the AGMs, this is a good question. I have to check. Okay, I don't have the answer to everything, but I have to check. And I think maybe usually after the end or ask me anything, we will send out an email. That's a good question actually. And let me just confirm. Yes, by right, previously there was no way to attend AGM, but let me check on that. And when we blast out the email to after the webinar, we'll have the answer for you. Okay. Okay, so let me note of that already. Okay, now so you click submit and then just follow the steps. Okay, now my suggestion is please do not transfer into the cash management account, because if you do that, after the shares are transferred into cash management or cash trading, if you have the old type account, the CDP will be delinked and then you will no longer be able to trade shares, Singapore shares, that and keep them in future trades. They will not be possible. So instead, please transfer into either a prepaid custodian or a cash plus account. Okay, and after you transfer in, your cash management account will still remain linked to CDP. So I think that will probably be the better way forward in case, whatever reason, you still want to trade on cash management, or for example, you apply IPO and then you got it. You can still apply IPOs, right? And the IPO share credited to CDP. You want to sell, you need a cash management CDP link account. So that's why, since the CDP match transfer will result in a conversion of your account to a custodian type of account, please transfer into a custodian account or a cash plus account. Okay, so that you don't lose that CDP link. All right. Okay. Next question. CDP match transfer, any fee to pay? No. There's no fee at this point in time. As I understand, it's been waived till further notice. Okay. Okay. Next one. Okay. Here's some Q&A. What type of account are included in this share transfer request? All of these accounts are eligible. Cash management, trading, custodian, prepaid, custodian, cash plus, or margin accounts. Okay. But if you submit the request and transfer into a cash management or cash trading, they will be converted to custodian. Hence, my suggestion, just transfer into either a prepaid or a cash plus. Okay, most people will have these accounts already, so just transfer into that. You won't lose your cash management or cash trading account in that event. Okay. How safe is it in custodian? Well, we are supposed to we have to segregate customer holdings from operational holdings of Philips. So I will say it is safe. Okay. In other words, your holdings are safe even if something touch wood were to happen to Philips. Okay. We're supposed to keep it in escrow. So you are not, it's not commingled with what the company needs to run. Okay. As in the funds that the company needs to run the operations. Okay. What's eligible to be transferred in? SGS listed securities, shares, ETF, bonds, T-bills. Okay. What can't you transfer in? You can't transfer rights. You can't transfer SSBs. I think you can't transfer things that are suspended and things that are unlisted, basically. Okay. Question: what are the potential maintenance fee in future? Right now, waived till further notice, till 2027, if I remember correctly. But don't quote me, but I have this feeling that the way it's going, it has to be continuously waived. Okay. But yeah, right now it's waived till 2027. In the future, should likely be waived, continue to be waived. Okay. I think the benefit really is the consolidation and access to proper advice for your portfolio level holdings. Okay. So that's that. Okay. Now, you don't submit, what happens to your trading activity, right? So some people may say that, can I not do this? You can. It's completely optional. Okay. You can just continue trading with CDP link account in that case, if you want your share to reside in CDP. That's all. Okay. So it is completely optional. Okay. Someone asked, all dividend paid to my cashback account were taken a cut by Philip. Okay. So please understand that there is a dividend processing fee if, let's say, your cash plus account is less than $250,000 in holding. So this is that dividend processing fee that you are paying. Okay. Now, if it's more than 250,000, okay, so some people, maybe they have a lot of shares in CDP and then they bought some in cash plus, but because, say, your cash plus only got 100,000 in shares and then your CDP got 200,000 in shares, then of course, whatever dividends in cash plus that were paid out, you will have this dividend processing fee unless you meet the waiver criteria. Okay. Now, if you transfer so this is another advantage. If you already, before you open a cash plus account, you got 200,000 in shares in CDP, you transfer in to cash plus, and now you have 300,000 in shares. All fees relating to, say, account maintenance, dividend handling, this kind of things will be waived. And this waiver for more than 250,000 is something that is already there even before this share transfer program. So this can be a way if you find that, I don't have a lot in cash plus yet, but I got more in CDP, and yet my cash plus, I want to continue trading, but is there a way to get around this thing? Yeah, transfer in your CDP holdings and then you cross 250K. Yeah, the fees are waived. Okay, so that's all. Okay. So I think I actually there is hardly any drawback to CDP match transfer, you ask me. But of course, case by case if you need to talk to us separately. Can shares under OCBC Blue Chip Investment Plan be transferred? Okay, I can't speak for OCBC, but the custodian is not CDP. You can't transfer it. Okay, yeah. Is this process irreversible? Yeah, it is a one-way transfer. We are transferring in to us so that you can consolidate everything for proper management. Okay. Ray asks, can transfer for under broker? No, CDP only. Okay. Because Standard Chartered, for example, if Standard Chartered is your custodian, then you have to go through the normal custodian transfer process. I have had transferred ProShare ETF from DBS Vickers to Cash Fast before. There's another client. But the point is, the custodian was DBS. So this only applies to CDP being the custodian. Then you can transfer in. Okay. So yeah. So I wouldn't say that it's a drawback. It's more like, it can be a benefit to some of you. Okay. If not, I don't see any drawback to transferring in to Poems. Okay. Okay. Some of you may have individual and joint accounts. Just take note that individual must transfer to individual Poems, or joint must be transferred to joint. Okay, so some of you may have that. So that is another question that will be answered. Okay, your Poem trading account will still remain the same, and I think that is another thing you need to take note. Nothing changes about the account, just the account type. Now, there was a previous question from Thomas. If you are still here, after 55 can apply to transfer all my stock holding under CPF to CDP first, and then subsequently transfer in from CDP to Cash Plus. Okay, so I'm taking it that you want to transfer from CDP, mass transfer from CDP to Cash Plus. That step definitely can, but transferring from CPF to CPF agent investment account to CDP, that step, right? You have to close the CPF investment account first. I think that's the one intermediary step you need to take. Then after that, you can transfer it to CDP, and then for CDP, do the mass transfer into Poems. Okay, so that is what I have to say. Okay, now I think that those are the more common questions we get asked, and of course, if you have questions about mass share transfer, I feel like there is it's actually the website is actually up. You can take a look at the FAQs. I can't go through every single one, of course. But if you have more questions and you would like to speak to us, then of course do feel free to reach out. I think there are cases where definitely you can benefit from this kind of share transfer, especially for people who may have a lot of CDP shares, and you always been sitting on it wondering whether I should sell this because it's not performing or what. Once you consolidate everything, then you have a good portfolio view, and then you can have access to advice. Okay, so what I can say is okay, there's another question. Is it a one-time transfer, or you can transfer some and then transfer again later? Okay, you can transfer now, and then you can later on, you buy more stuff and it's sitting in CDP and you want to transfer in, you can then activate the transfer again. Okay, it's just that this transfer is an all or nothing transfer. Once you click transfer, you transfer everything in. You cannot selectively transfer in. All right, so I hope that answered your question, Jeffrey. Okay, I will actually, I know I overran a bit, so sorry about that, but that is the gist of it. And as always, we'd like to have some feedback on this ongoing session, because we also reach a point where we're also not sure what you all want to hear from us already. Right. So what I'm going to say is I'm going to paste a link to the feedback form. So please do fill it up. And if, of course, you've had any positive experiences with our team in terms of your portfolio, yeah, feel free to leave a testimonial. We'd love to hear from you. Actually, last month, a couple of my clients said very nice things. So thank you very much. I think you know who you are about the work that we did for them. Okay. So anyway, for those of you who prefer to scan a QR code, this is the QR code for the feedback and comment form. I'm going to leave it up here for a while. Okay. And yes, to those who asked the question about AGM, if your shares are sitting with custodian, I'll get back to you all before we send out the email. Yes, so that should take us to the end of this session. Thank you very much, everyone. And of course, you need to speak to the team. Okay, I'm going to move on from this QR code for a little moment. Okay. Oh, yes. Okay. Yeah. Okay, forgot to mention. So, someone asked about foreign shares as well on SRS. So all I can say is that if you're looking at foreign shares in particular, then you may want to consider the managed account for SRS, which the team is running. And this is the performance in the past since inception. So it's been around for about 1 year plus. Okay. Granted, we are not going for maximum growth, as I mentioned, but we are looking at low volatility, meaning that you'll see that the drawdowns are not that severe compared to a usual S&P 500 dip. Okay, and this is definitely a SRS portfolio because you can see here, you can see that the fund source being SRS, we are actually buying into US shares, including the S&P 500 ETF. Okay, of course, this portfolio, I can't explain the whole methodology behind it in a single session, but just know that if you are looking beyond Singapore market and you would like to have foreign shareholdings, then of course, all these are US shares, Coca-Cola, Treasury ETF, and this and that, right? So that is something you can definitely consider, especially if you are extremely busy and do not have the time to monitor your SRS investments. Okay, I'll say this is something definitely worth considering. But to know more, I would say do have a chat with us so that we can share more with you without any prep time pressure. All right. So I've come to the end, and these are our contacts, myself and Chung Wei. You can scan that for our contacts if you need to speak to us about anything. Okay. If not, I thank everyone for attending tonight. Take care of yourself and be well. And yeah, we'll see you at the next AMA. Thank you very much. Oh, yeah, and if anyone needs the feedback QR code, just let me know. I can always go back to the previous slides. Thanks.